Good evening and welcome to the Australian Stock Market Show. Now, if you are feeling a little confused about our stock market's direction right now, then I assure you that you're not alone. One week it's up strongly, the next it's down. Now, the All Ordinaries Index was up strongly last week, so what's next? Tonight we will have a good look at world markets and give our thoughts on what we believe the stock market will do moving forward. Now, tonight we will share with you 10 stocks that you can look at to buy now as we look at the banks versus mining stocks. They're both rising, but who will perform best? First up, we'll share our hot stock tip for the week before diving into the world stock markets. So sit back and relax as we answer your emails, take your phone calls, and give you the answers to some of the important questions around the market. Hello and welcome to the Australian Stock Market Show. I'm Dale Gillham, your host for tonight, and joining me is Janine Cox, and we're Australia's most trusted stock market educators.
And that's a great way to start. Thanks, Dale, and hello and welcome everyone watching. We've so much to cover tonight, including big and small miners and banks. For capital growth and income, to kick things off, let's get into this week's hot stock tip.
Geez, put me under the pressure, don't you? It's like, isn't it terrible?
I enjoyed that moment.
You did. And it doesn't normally happen, does it?
No.
Today we're going to talk about Aussie broadband as our hot stock tip for the week. So let's go and have a look at the chart anyway on the screen. So this is the market index website. So obviously currently it's about $3.88 at the moment, slightly up today. But looking at it, look at the PE ratio, Jane, 42.64. Wow. Would that scare you off?
Well, a lot of people would probably say, why are you looking at this? You know,
well, wait till you
because
see
the
the
PE
chart.
is so high.
But that's why you look at the chart, because the chart will tell you the right story. Because you'd look at that and you go, I wouldn't touch this stock. And then you look at it, it's at the top of its 52-week range. And then 69.43% return. And again, would you be looking at that or not?
Well, I think about it this way. First is you constantly point to the 1 year return when we look at market index, and often when they're negative, you say, well, that's good, that's what you want to see. So what message are you going to send tonight?
I just look at it anyway. What I'm trying to point out is half of this stuff is irrelevant to you, because once you look at the chart, you actually see the real story.
Yeah, because imagine if the stock had been on the big roller coaster ride down, and then it had started to take off. Of course, the yearly return's going to be significant.
Yeah,
after
because
that sort of
that's 69.3%, 43% is based on what the price was on today's the 19th, isn't it?
Yeah.
On the 18th of September last year. So it's like, well, what had happened in between? It could be a whole year. But let's go and have a look at the chart anyway on Optima, if I can figure out where Optima is. There it is. We've got so many things to cover tonight, haven't we? But look at this points. You're on PointsBet holding. There we go. Now we're on the right. You must have changed that on me, I betcha. Have a look at this. This looks absolutely freaking awesome, if I'm allowed to say that. From a point of view, it's come really heavily down from that high there back in April 2022, from $6 right down to that October 22. And that's why it's done 64% return over the year, because it was coming off a definite low. Yeah. And so it's done really, really well. Had some resistance around here, which pushed it back down through here, and it's up very, very nicely and quite strong at the moment. So it's looking really good, if you have to ask me. But I like what it's doing at the moment. Volume's not too bad. Nice steady downtrend through here. Found some support. Here's some resistance levels that we've got, but look at what it's doing this week. 2 days this week, and it's just motoring on. So here's the next sort of heavy resistance level there at $4.52.
9 weeks up, it's still early in the whole cycle, isn't it, off that low?
Absolutely. It's still very, very early on.
Volume's been supporting it, and it's higher actually than it has been over the past year. So that's good to see.
Well, there's 17% before that major resistance through there, but it doesn't mean it's going to stop at that point. And this is where
the key is not about buying, is it? It's about the selling on this type of stock particularly.
Okay, explain more so everybody understands.
So the buying's important. It's when you buy, like they say, it's when you buy, if you buy at lows, that's great. But this is actually in an uptrend. So people will be saying, well, hang on, do I buy stocks that are going high, and how much higher is it likely to go? But really the issue is going to be when you're buying something in a trend is how you've always got to be thinking about how you're going to be able to sell and hang on to some of that profit.
You know, yesterday I recorded 2 podcasts yesterday, so I'm not sure. One will come out next week and one will be the week after. But to me, one of it was about you always buy into uptrends. You don't try and the stuff I was reading was 18 rules on trading rules.
Yeah.
That I think I've had for over a decade, and now 15 years old then. So this list quarter of a century old, and it basically said, don't buy on bottoms, buy into the trend that's already there.
Or when it's falling, don't buy when it's falling.
Yeah, don't buy when it's falling. So to me, this is a perfect example of buying a trend that's already up. So I like it.
Great.
So there you go. That's my top.
Dale's happy. That's it for our weekly hot stock tip. Now it's your turn to get involved in the show and have your questions answered. Remember, we prioritise phone callers, so call now on 03 9290 9988. That's 03 9290 9988, or you can text the number on your screen.
Now, to give you an incentive, the first caller into the show right now will get a free copy of my book, Accelerate Your Wealth. So make sure you pick up your phone and dial 03 929 09988, and you do it right now. Now, while you do it, tonight is the third Tuesday in the month, which means we have a look at world markets. So let's go to the charts, Janine.
Yep, that's great.
All right. All right, on your screen right now is the watch list of world markets. So do you want to take it away?
Yes. Look, I mean, the interesting thing about this is it's all green
it's all
almost.
Green.
Isn't that amazing? So what is not green? I guess that's a good place to start. So we've got down the bottom there, all the way down the bottom, we can see New Zealand is down 0.67, but it's pretty flat. But the Hang Seng is the one that's the negative, which is interesting. So,
but Shanghai's only up 1.24. So
well, that's the Hang Seng drifting down there. If people can see that on the screen there, it's been
not really.
Well, okay, let's bring it up then, and we'll bring up the monthly chart. Perhaps that better explains things. You can, but I actually really like this pattern that's unfolded to the downside, and I see that this is just a test of that low. But we could see a move up from here, so it's just about being really patient with that and seeing if this is the low.
Well, Asian markets are a little bit different than the US market or the Australian.
Oh, totally different
They're
chart.
a lot more volatile.
This market was actually very similar to our market all through here, up into this high in 2018, but everything changed after that. So a totally different trajectory now. So look, the interesting thing here on the leaders board, we've got the NASDAQ 100 up around 40%. So there we go. The tech side of things is pushing it higher. We've got the Nikkei stock average up 29.8%. Wow. That is fantastic.
That is
Tokyo
huge.
Up almost the same. When we come down, we've got the S&P 500. It drops down quite a bit there, 15.5%, but still quite a good figure there for the US market. The DAX is actually up 12.4%. It's interesting to see what's going on in Europe, but that's 12.4. That's still not to be sneezed at. India has actually come up a fair way, I think, 11.05%. Now, where is Australia at the moment? 2.86. We've still got a long way to go. So if our market breaks out of the blocks, we could see that turn around
so
and
close to
move
the
up
Dow. Dow's
significantly.
up 4.45 here, and that just shows you how much tech stocks in the US have had to do with the NASDAQ comp and the S&P 500 moving, because most of that S&P 500 moving up 15% is the tech stocks.
Well, how further are they likely to go?
But how high can they go before they're way overvalued? Because they can't just increasing their business size that fast, can they?
Right.
They're not getting a new iPhone out every
Unless
week.
there's some sort of technology explosion.
Well, I mean, at the moment it's AI, isn't it? But then what are those companies, the big companies? And they're not necessarily those big companies, because we're talking about, Apple, Microsoft, Nvidia, those sorts of companies.
We don't know. There could be something new around the corner that causes it to keep going. Just watch this space.
Maybe they'll make a robot of me and you'll be sitting here with a robot. What do you reckon? So what else have we got to talk about?
All right, look, I think the interesting thing here is to talk about the ones that are down at this bottom end, because these are the ones that could push up higher, and you could see a bigger move up on the laggards, I guess you'd say. So the FTSE 100's been interesting. I just want to have a bit of a look at that. To me, that looks amazing how that's setting up right now. This is just to watch this space with the FTSE. So
maybe they're finally getting over Brexit.
Yeah, well, look, we're through all of that, which is really good to see, all of this sideways consolidation, but another push through that high, and I think it'll be free of all of this resistance here. So that's the FTSE, which is that's probably one to keep an eye on, but our market actually looks better than that, even though we're not back up through that high yet. And I think it would be really easy for our market just to take off and
our market's a bit
the
frustrating at the moment, isn't it?
Isn't it? All right, that is it for our thoughts on the world market. Soon We'll get into some great stocks, including BHP, Northern Star, CBA, South 32, Min, and more. Before we do, let's get into our first email.
Alrighty, our first email tonight is from Alexander, who says, "Hey Dale and Janine and team, I need your help." Well, that's what we're here for, mate. He says, "I purchased PointsBet holdings in July 2023 for $1.65. I set a stop loss of $1.50. My stop loss was triggered on the 6th of September before the market opened. Now, my share didn't automatically sell. I thought my capital would have been saved. The share price has fallen to 77 cents. I contacted my brokerage account, one of the big four, asked why my shares did not automatically sell. All my previous stop losses have worked. They replied, the reason why it didn't sell is because it was a company purge. Now, I don't understand what it's meant by this. I'm now stuck in this stock. Selling is not an option as it takes me a very long time to build my capital as a single parent. I need your advice from the number one Australian stock market gurus. Much appreciated. Thank you. Keep up the great work. Cheers, Alexander. The good news, Alexander, is you don't need to worry about it at all, mate. You really don't know what's happened was, and we're going to bring up the announcement. We're going to go to when this sort of thing happens on a stock, when you get just a fall out of bed like that, always go straight away. Don't go to the broker. Go to the company's website first, because the broker doesn't really sort of care too much. Well, is that allowed? Am I allowed to say that? But they don't care much. Always go to the company's website and look for the announcements, or the ASX. Go asx.com.au, company announcements. Bring up the announcements for the stock. Did you want to bring it up on the screen?
I've got it there, but
no, the company announcement I've asked. So not.
Can we just talk about this first before we actually go to the announcement?
I want to tell you what happened, and then we'll go to the chart.
Oh, okay. You want to do it the other way? Yep.
No, well, that's what I planned.
Yeah, you did do. You did
I did plan to do that. No,
All
so
right.
if you can bring that up, what actually happened is the company sold off a US division and everything else, and all the money came in for that. And instead of keeping the money in the stock, they decided to pay it back to you. So you're going to get it. So this is the PointsBet website, and I just clicked on Investor Relations Centre, and you can see it says return of capital up there, and it's all in black, but you can see following the sale of US funding requirements, blah, blah, blah. If we go down through here, it says at a general meeting on August 29th, shareholders voted in favour reducing PointsBet share capital by up to 458 million by way of two tranche equal capital reduction. So on 1 September, it announced that it would give you $1 per share, which you'll get in a couple of days. I think it's the 22nd of this month that they're going to pay that back to you. So for every share that you have, you'll get $1, and then the second capital return is expected to be 125 million, which equates to that amount down on that. So you'll get that in the second tranche because you own the shares before that all happened. So you will get that. Anybody buying it now, they won't. That's why it dropped out. So do you want to have a quick look at the chart?
So $1.40 then, if we go and have a look at what that means.
Yeah.
$1.40, what have we got here? Where was it? Let's say $1.65 was when it closed just before the fall.
Yeah. So
and it's fallen to about 170. So there's the dollar.
There's your dollar.
But you're getting an extra 40 cents.
So you're actually in front.
Yeah, that's
there you go.
Like
so Alexander, you've actually made money, mate. But if you sold your share today, you would still get those two tranches because you did own it on that date. So that's the good news.
The frustrating thing is that the gap in the chart really scares people, but eventually that gets adjusted.
That will get adjusted after it starts paying it out.
Yep.
So yeah.
All right, it looks like we've got a caller.
Oh, sorry, we do have a caller on the line, Janine. Oh, sorry, I wasn't watching. Who have we got on the line? Is it Dazza?
Hi, that's me. How are you?
Hey, mate. Good to have you on the show. Where are you from?
I'm from Sydney, Hurstville.
Hurstville, good place. Good place. I've been there myself. You've got a question for us tonight?
Absolutely. Well, first of all, I'd just like to thank you, Dale and Janine, for all the work you do, and also an extended thanks to the entire team behind you. I'm sure it can't be possible without everyone behind you, so and it's also been consistent throughout the year, so thank you very much.
Where are they?
Oh, that's very nice. Thank you.
No problem.
Nah, it does put on a lot of work, yeah.
I'd like to inquire about ALC,
Yep.
that's the Alcidion Group, so A for Alpha, L for Lima, and C for Charlie.
Yeah, mate.
I believe this has actually completed a head and shoulders pattern towards the downside on the monthly chart, and it's also rejected the Fibonacci zone on the 61.8 zone quite sharply. The only regret is that I haven't actually got in at the 61.8 zone. So I'd like to actually short this position at its current price towards the 100% level, which would be 0.0395.
Yep.
And I would also like to place a stop loss at 0.1261 cents, making the risk-reward ratio 1 to 1.7. And I've got a total risk exposure of about 4%.
Okay, that sounds like you've got it all worked out. What do you need Janine and I for?
Well, you guys are awesome. You guys are fans. We're all fans. Yeah, I've actually got a fan of people watching.
Yeah, normally you don't see, I'm going to make a comment, we haven't even looked at the chart yet, but you don't see a head and shoulders pattern in a downtrend. Head and shoulders is a topping pattern, not one that you find halfway down the trend or at the bottom of a trend. You find inverse head and shoulders at the bottom of a trend, not head and shoulders. But we'll have a look at the chart anyway.
Yeah,
do you want to say
point.
something?
No, it's a really good point. And a lot of people get stuck on that.
They do.
They come to us and they've learnt all these things online, and then we show them, no, this is the way that you need to understand it.
Yeah, well,
and
what is
it's
a topping
thinking about
pattern?
the market, isn't it?
Yeah. So what have we got there? So have you got
All
the chart up there?
Yeah, I do. So ALC, just looking at that, he's talking about wanting to short it as it falls away.
Well,
keep going. But the interesting thing is, it's in a downtrend. Okay, so I mean, I just want to go back to his thinking. He's thinking the right way, because he's not thinking, okay, I'm going to short something that's going up. So many times we see people looking to short stocks that are actually at the top of their trend.
Most people short bullish markets.
Yeah.
And
So
they
he's
should
got
be
his
shorting bearish.
thinking the right way.
I love it. I really do love it. It's a bit more illiquid for my liking. It's quite.
So that's another thing that presents another challenge then when you're trying to short something that is illiquid. How do you get a decent enough position in a stock? You've always got to be mindful of that depending on how big it is.
Well, it is,
and then that may actually help you if it's in a decline. So that's one thing. But then you've still got to be able to get out of it when it bounces and tells you that that's the end of the move down.
Do you know something? It's quite possible this is not actually, because he's betting it's going to keep falling away, and I'm not so sure it's still in it. I'm not convinced this is bearish. It might be short term, but I think this could be the start of a new bullish run on this stock. And so whilst I'm not disagreeing with what he was saying, and he's taking
at
a low
$1.
risk,
It's at 10 cents. Sorry,
but it's not a stock that I would ever short.
Yeah.
Well,
there's a lot of support there, isn't there?
Yeah. All right.
All right, then. Now it's time that we get into our next question, which is from Dan. Hi, Janine, Dale and team. Thanks for all the time you put into the channel. It's great viewing. Now, I know Janine is not a fan of uranium. Here we go. And I'm going to run the gauntlet and seek your thoughts on Paladin Energy. PDN, I don't own the stock, but I've been watching it for a while with a number of my rules now triggered. I feel I may have missed my window though, and would like your thoughts on it. If you would have purchased at what stage, and if you think it's still in some sort of run. All the best, Dan. Go Cats. He had to get that in there, didn't he?
Hey,
should I have left that out?
It was not me.
It's always about footy.
So Paladin, what do you reckon of Paladin?
Look, the chart looks good in terms of it going up, but do I have to comment on it?
Yes.
He's asked me to.
Because it's a stock. Forget about the name of it. It's a stock.
I know.
So tell him what you think.
It looks bloody fantastic. Can I say that as an Aussie?
It looks bloody fantastic. You can say
it's
that.
going up. That's the bottom line here. And
I love
looks
it.
really
It looks
nice.
really nice.
I think it's due for a short-term pullback though.
It is.
Given where it's risen to, it's probably going to challenge that high there. So I'd just be watching over the next few weeks just to make sure that there's not some sort of a knee-jerk reaction we're seeing and a move down.
Is that all? That's short and sweet for you.
That's short and sweet.
That's short and sweet. So anything else? Because he's not in it, is he?
Well, look, I mean, the challenge is to get into something that's in a run. We were just talking before about buying in a trend when we looked at ABB. There were some nice little rules that had triggered there to be able to do that. But if a stock goes through its high, so let's just say, for example, this high here, often we say once a stock goes through a significant high that in theory it should keep going, but that's not always the case though, is it?
Correct. It's
because
not always
stocks
the case,
can
correct.
come back and test that, and a stock like this wouldn't have to move too fast to take you out on a stop loss. So if we just have a look at that from that high, your 15% stop loss is just right under that bar there, so it doesn't leave you with a lot of room.
Yeah, and that's the thing is people don't know where to exit and also where to do their stop losses or how to trail a stop loss either.
Exactly.
Because the thing is, but I do like the stock at the moment. But
So do you think that, has that answered the question, or are you going to look at it in
I
a
think
bit
that's
more
fine.
detail?
We are going to look at Paladin again in a little while because we do have another question on Paladin, but more about stop
later
losses.
On
that's later on. We're going to do that
after the break, I think.
Is it? Okay.
That is. Our topic tonight is all about the top mining stocks versus bank stocks. Will the big miners beat the big four? In our topic, we will get into stocks that have been splashing out the cash in dividends, and in recent years, some investors have been switching from the perceived safety of the big four banks to somewhat riskier miners to get some of these huge dividends.
Well, that makes sense if you're chasing income, but when do you actually switch it back?
Well, that's a good point, because if people were driven into the dividends, when do they flip their thinking? Exactly. Now, we know most don't plan their exit when they buy. So we're going to compare how big miners and banks are tracking, and we'll share our thoughts on whether we'll see a move back into bank shares. Now, I cannot wait to show you what we've got tonight, but first I have a favourite quote for you from John C. Bogle. You might be wondering who he is. Well, in case you don't know, he's John Clifton Jack Bogle, who was an American investor, business magnate and philanthropist. And Dale, this part's for you. As a pet hate of yours is index ETFs.
So what's the quote?
Hold your horses, I'll get to it soon. Now, John was the founder and chief executive of the Vanguard Group and is credited for popularising the index fund. Pretty cool, wouldn't you say?
Not cool. I'm not that excited. Everyone knows I don't really like index funds, and I think they're a bit of a waste of time.
Well, I was hoping to touch a nerve there, but it didn't work. Well, Dale, John said, I spend about half of my time wondering why I have so much in stocks and about half wondering why I have so little. I guess it makes sense why he created the index fund then.
That makes perfect sense to
Stay in
me.
it. You don't have to think about it.
If you ask me, that quote should have gone in your what the segment, because what the?
Yeah, exactly. He doesn't understand. I mean, how can you not understand that you have to be out of some stocks at times and therefore you might have cash there? Anyway, we know that many use dividends as additional income and some rely on these returns, but should you in the current market? My advice is to rethink your strategy. You should not stick with a stock just because it pays a big dividend. So true, isn't it?
So true.
Well, how about we first take a look at this article in the Australian Financial Review.
Yeah.
The article title reads, 3 reasons the ASX dividend bonanza is over and companies are returning less of their earnings to shareholders as they brace for tougher conditions. Is it time for an investment rethink? What do you think?
I think so. I don't ever invest for dividend. I don't ever intend to.
Well, the funniest thing was when I came up with this idea for tonight, I hadn't even read that. So it was just interesting to me that the timing of the thinking and what was actually being
buying
said.
and selling is creating income.
But once it's been written in things like the AFR, then people have been in the big institutions have already been thinking about this, for months, like we have.
That's true. Totally agree with that.
Well, Dale, it also states, AMP analysis shows that only 43% of companies in this earnings season increased their dividend compared to the usual 58%. Now, consensus estimates have revised down to a 5.7% fall in earnings growth in 2023-2024 year. Now, that suggests lower dividends as earnings fall and companies return less of those earnings.
Well, that's concerning for investors relying on their dividends, Janine, isn't it?
Exactly. Now, for us, this was not unexpected, as you and I were actually expecting high dividends to fade, and for most stocks, I believe we have seen the peak in the yields already.
Well, that's important, isn't it?
Is.
So, okay, so I'm interested.
It's critical.
Well, I'm interested. What's next?
Yeah, I know. You're just hanging out there to find out which stocks. Well, there are also a couple of graphs that really illustrate the point. To understand what's going on, we've got to share these. Now, the graphs are definitely worth closer inspection.
Okay, now I'd like to agree with that one, but now you've also got a line graph of the S&P ASX 200 dividend payout ratio showing the historical and forward dividend yields for the month market. Now, can we walk through this, Janine?
Yeah, so you'll see that the average dividend payout ratio on the S&P ASX 200 is near the lowest in a decade. Now,
well, that's interesting. It's peaked in 2016 and has been heading steadily south to around 62%.
Yeah, exactly. So, think about that. So they've actually been dropping the amount of cash that they're paying out. But we can understand that in a way because in 2016, think about what was happening when it was at the peak. We had the low of the mining cycle.
Yep.
Right, so miners were trying to get people back into their shares, pump up the dividends.
Yep.
We had banks in the Royal Commission.
Yeah, but they kept falling until...
They kept falling,
from 2008.
And they cut the dividend at one stage, right? So there was a bit of a turn there. So look, it changes with different cycles over time, the dividend payout ratio. Don't expect it to be the same. And often when companies announce that they're going to cut the payout ratio, the shares get pummeled in reporting season. So investors are sitting there thinking, well, they just had a great report. What happened? Well, it's not until you keep reading that you see, what have they done? Well, they upset the institutions, didn't they? Because that money is a certainty for their bottom line. If they think that they're going to get that sort of dividend and all of a sudden it gets slashed.
I never worry about dividend. To me, they're just like pocket money. It's like, if I get it, I get it. I'm just going for growth.
Yeah, exactly.
But,
yeah. Well, that brings us to something important now. We've got to look at what's going on with yields.
All right, Janine, can you please bring up the graph of the S&P or the S&P ASX 200 forward dividend yield, and then we can then share our thoughts on that graph. You got it up there yet?
Yep. Okay. Got it there. Now you can see there that the with the forward dividend yield, we've got a very volatile graph over time. So
that's over 20 years.
But look what happened during the GFC. So during the GFC, we can see that huge spike with the rise in share prices was a corresponding rise in dividends, which is interesting, isn't it? So that helps us because it tells us where we are. So we're back into this sort of sideways zone, and our market's sideways right now. Right?
Yeah.
So we're in normal land in terms of these dividends, but we're just seeing this bottoming out happening at the moment. I don't expect it to go lower. If anything, I'd expect it to just sort of stabilise and trade within this range for a while.
But historically, if we go back 50
I think we're
years,
back to normal land.
I was about to say that because normal land is 3.5%, 4%.
It's more or less 4.5%, isn't it?
I don't know. I've been investing for gazillion years, and it's generally 3 to 4%-ish, but 4.5%. Same. Pretty close.
But what's interesting is that when we had that big rise in say around 2012, remember we came off the bottom of after the GFC and the market started moving up, we also saw a corresponding increase in the dividends as well. So I just think that people need to watch this curve because it really sort of explains where there are tipping points going on or changes in the direction of different sectors in the market as well.
Okay.
Yeah, particularly mining.
All right.
All right.
Well, is that it?
That's it.
Is that all?
No.
Okay.
Now let's take a look at a statement on CommSec's website that as it shares something everyone needs to know.
Okay, now this is interesting. So I'm going to read this if you don't mind. Now the title of the article reads, Top Dividend Payers of the Australian Market. Sounds great, right?
Yeah, it does.
Now in the body you'll find it says, to get a sense of what is good dividend yield, if we look at the average yields of all S&P ASX 200 companies over the past decade through to April 27 this year, it is 4.1%. In fact, the average over the past 20 years was also 4.1%.
Now that's funny to me because, you and I were debating about what the figure was.
Yeah.
And I'm saying 4 to 5 and you're saying 3 to 4.
And we're in the middle.
So it's in the middle.
Yeah.
So I already knew the answer to that, but I wasn't cheating.
Oh, you weren't cheating?
No.
No, but I'm just thinking of all the dividend yields. I mean, most of I used to trade News Corp all the time and it paid nothing in dividend yields, and BHP it paid almost nothing. I didn't care because to me getting dividends is just a byproduct. If I got one, I got one. And I used to have shares that I'd buy and sell before I even got a dividend.
Well, I think it's also about why are they giving the dividend that they're giving. So, historically those growth stocks and some of those health stocks were paying really low dividends. Remember, CSL, I think, used to pay 1.8.
Is this because of the funds and everything wanting some sort of income coming into their funds to help them?
Sure they do. In an environment where the capital growth is subdued, they're going to want those dividends to continue to hold the stock.
I'd rather money to stay in the company company for it to build and grow and not get taken over.
But the point is, if there's a risk-on situation and they're not spending the money, the institutions say, well, you can't just leave the money sitting there.
Of course
you need
you can.
to pay it out to us. Well, that's what they do.
Catch a war chest.
Well, that's what they do, and they get onto boards, they get influence, and they push and
the
shove.
institutions then. That's why everybody needs to buy shares for themselves.
Or then they go like what we saw with some of the stocks recently, they put articles out there pushing the share price down.
Yeah, well, I don't agree. I think every Australian should be buying direct shares and not buying ETFs and index ETFs.
Exactly, you're just giving more power to the big
You're just
institutions.
giving power to the institutions and they screw it up.
Okay, thanks. We're both on the same team.
That's my soapbox.
Okay, so now it's time to take a look at some stocks worth keeping on the watch list. Now, and Dale, please tell us which ones that you like.
All
That's
of
what
them.
we're waiting for.
I want all of them.
Yep.
Okay, so we're going to, what have we got there? So we got the watch list
Okay,
first.
so here's the watch list, okay, and I've ordered it according to the dividend yields paid. I've just picked
31.56% for Yancoal.
That's Yancoal, yeah.
You serious?
Well, that's what the
share
data
price
says.
must have tanked a bit.
Now, I haven't checked to see whether they've paid some sort of additional dividend that may have inflated it, but still, it's huge. Grange Resources is 29%, Fortescue's been 14%.
Wow.
Now, no wonder the share price hasn't fallen away. Woodside Energy, same deal, around 13. South 32's right up there as well. New Hope Corporation.
But South 32's fallen over 30-odd%.
I know. It's why would you hang on to that for 10% even?
Yeah. It's like if you could guarantee that 13%, you go out and borrow the money on your house and put it into the stock, wouldn't you? And get double the amount you're paying in interest to the bank.
Yeah. Look, I mean, someone actually spoke to me this week and they said they'd heard you talking about if you got spare cash, put it against your loan to pay off non-deductible debt. But there's a point where the market becomes better to put money into than to put money against your loan, and you've just got to decide what that is. So, and we've been sitting here for 2 years now, more than 2 years, waiting for our market to rise. I think it's getting itchy feet by now.
I'm getting itchy feet, let alone the market.
Why? Have you got some issue?
I got money to burn on it's to go into some stocks at the moment. I'm just holding back.
You missed that. All right, went straight to the keeper.
Socks. I just ignored it, Janine. Okay, keep going.
Okay, so Westpac Banking Corp, interesting there. That's a great dividend. We're just sitting there watching Westpac at the moment. It looks incredible. We'll get into that.
Westpac and NAB look really good.
I think we're getting into Westpac in the second half, though. National Australia Bank 7.88, Commonwealth Bank 6.4. That's still a really good dividend. And ANZ, and we go down the list, and here we've got ones that are not even paying dividends, but I've just thrown in a few just for out of interest sake, because there could be some really good shares that pay really good capital. But why would you not? Why would you want to miss out on some of those when you might be getting a better return as a result? So it's all about weighing it up on a stock by stock basis, isn't it?
Okay, so we're going to BHP.
So if we go into
stock?
BHP, right, thinking about some of the miners and what they're paying now, BHP's paying 5.72, which you've got to think that when it's at that sort of level, it's more reliable, isn't it? So it's less likely to move far from that. So you're talking before about how much you can trust it. The stock's sideways. Yeah. It's not falling away. Obviously, the market likes that, but at the moment, I'm just looking at this and thinking, I can't believe how well BHP's held up. I would have actually preferred to see it fall away. Because like you say, these sort of moves, they're just not encouraging anything other. They're encouraging people to try to hold for a dividend.
Well, they're trying and a lot of, can I say, more inexperienced traders are trying to get in and out really, really quickly all the time. And so
really small short-term
trades, and it's like, trying to get some money and scalp the market a bit.
Yeah.
And really that's not a great way to trade, but they're doing it.
But look, I mean, BHP's a way off yet. I think there's a couple of important levels, and one of them is across here.
Yep.
And then of course you've got the high, but the support level is also quite significant now, given how many times it's come back down to it. So we're on the cusp, everybody, of breakouts of some of these amazing shares. On the monthly chart, one of the things that I'd like to do is I like to increase the range on the right-hand side. This is the maximum here. I'm just going to make that say 80, because it really puts stocks in perspective. Someone said to me, I don't know which way the share's going to go, and I just said, well, just shrink the chart, put the white above it, and then have a look.
Well, you make money on the left-hand side of the chart. You don't make it on the right hand.
Yeah, so
sorry, the right-hand side of the chart, not the left hand.
Exactly. So when you put it this way, it just looks like it's just following a normal trend up there, and it's more likely to continue. So that's what we're thinking with BHP at the moment. So a nice 5-point-something% dividend plus potential to make good growth on BHP. I don't think you can get better than that. If it falls away, I just let it go and just wait and be patient. I'm not saying we buy it now. It's just too early. You've just got to have some really good rules on this one. Now that it's only listed, we don't have that dual listing. There's less concern about it, moving around as much. So from that point of view, it's more stable. But then you've got the other side of that. I guess not having the energy side probably makes it less volatile as well in the long run.
I'd say so. Almost
to the downside. So then Woodside we're looking at here. We can see the sort of volatility that I was just referring to when we're thinking about BHP on Woodside. We know that during this time, Woodside was paying much bigger dividends to try and, it's actually back here. In May 2014, around that time, it was offering much higher dividends, which pushed the share up to that final peak, and then it fell away. BHP tried similar tactics around 2011, right before the high there. Around that time, there was something going on there with corporate actions to offer to investors, and of course, then there was a dramatic fall after that. So always be careful about what you believe about these extra payments. Sort of, it's like, they're dangling shiny trinkets
to distract you from what's really
going on. So here we can see this nice move up. I'm just waiting for, I'll just expand that up. We're just waiting for Woodside to see if it'll pull back a bit. Ideally, that'd be great if it took out that low there. We could just see a little bit of a settling off in the share price and then a confirmation if it moves up. But, it's still, some investors are already, they've bought in off these lows here thinking that that was the bottom, and they may be right.
And they may be right, yeah.
But, if we're looking back here at the chart here, Woodside's got a 13, it's a huge dividend in there. Huge. So that's interesting there. So it's, that's why it's held up so well, I think. So we've got New Hope Corporation, which I actually really like this chart, the way that it's unfolded.
It does look good, doesn't it?
Looks good. It's actually traded above the high of this October 2011. So that was the high when the mining crunch occurred around for some sectors around that time, all the way into this low in 2016. It's pretty common on a lot of stocks. But now it's looking great. I had a huge list. It was really hard.
We're going to go through all this list tonight.
So we're not going to go through this.
I need to go to bed
because we don't have time, but that's what I'd like to go through.
I know you probably would.
So New Hope, we're up to 9.7. We can see here, I've got that one on there. A good dividend, but this could be a bit more risky than say a BHP. I'd just be watching that closely. It needs some really good rules under it. I just want to put a line of support across here just to show what's holding it up. It's really enjoyed trading within this range. It's sort of about $6 and down to around $5, so around that range. It's not to say that it wouldn't come back and test that again, but it looks like it's free of it, doesn't it, at the moment? So another push up, I'd like to see it push up one more month up just to get to this next level. So it's got another maybe a week, 2 weeks, a month back up through that level, and then we're more likely to see a bit of a pullback. And then we'll know whether it's going to go through that all-time high. But I think if you're holding this, you'd be pretty happy with it right now.
You'd be ecstatic, I think, holding this one, and I'd still be
getting those dividends coming in as well.
Yeah.
And Northern Star looks interesting, but look, we were having a discussion with the investment team today, analyst team today, about all the gold stocks.
So what was the discussion?
So the discussion was about how the gold stocks have unfolded. Okay. The Newcrest, the big ones, Newcrest, Evolution, and Northern Star, and they're quite different. There's similarities, but they're quite different. So Northern Star's actually gone on much harder.
So why are they different?
Newcrest.
Well, how are they different?
Look, there were different things that have happened along the way. So you've got obviously the gold price that's having an impact, and then you'll have individual company effect as to why that's happening. So it's about going away and reading those announcements, like you said before, to that gentleman, and making sure that you're familiar with what's going on with each individual company. But more than that, it's about looking at risk with these stocks, because they're quite volatile and they can really turn quickly. So you should, I think gold, it's great to have a gold stock on the watch list, at least one. Yeah. And it's a question of which one you like. And I'm not suggesting that I prefer this one over, say, Newcrest, which is a top 20 share. It's good for top 20, but more volatile than a lot of the stocks, say, in the top 20. But I just think it's interesting how the dividend payout that we're getting.
It's 9.72 for New. Is it we're on Newport?
No, that's New Hope. Did I actually? There it is down there.
Sorry, at 3.3.
It's 3.3. So would you expect? That's a traditional level for a growth stock. Anywhere between about 2 and 3% is often what you see for those growth stocks when these companies weren't paying huge dividends. So because of that, it makes you think that, okay, if I'm not in it for the dividend, then it's got to be producing something on the growth side, which we're not seeing right now because it's just had this big pullback. But that's a really strong level underneath it there. I'm just watching to see if it goes through that high there.
If it goes through that, I do like, this is one of my picks at the moment. I like that.
You like it?
I do like it.
So we've got this move up here. So some resistance there around 20%. We've still got upside to the all-time high, so there's about 40% to that.
Can you expand
high.
up the weekly chart just a bit before we move to the next stock?
Sure can.
Yeah. So just a little bit
Do
of
you wanna
weakness
have
the last. No, I was just looking, we've got a tiny bit of weakness in the last couple of days because that's this week, it's Monday, Tuesday's data. But, if this was flipped around and it was closing on its high, I'd just look, this could literally be a buy within the next few days.
Yeah, so think about this one, is if those other big miners are getting 10% in terms of the dividend, they might not get a lot of capital growth.
Correct.
But if this one gets the capital growth and only a small dividend and make up, just to that high, it's 20%.
20%, yeah. That's why I like this one. I think it's one to watch. I wouldn't be buying it today. I'd just be waiting for the end of the week. Wait for the end of the week and see what happens. Yeah, I like it.
All right, okay. So I've got S32 now. This is a real favourite with a lot of people.
I so want to trade this stock.
Yeah. It's amazing stock, isn't it?
Yeah.
So let's just have a look at the table and see if we've got South 32 up around that 10%. So a huge dividend, but I think with everything that's going on, remember what we were talking about before, that these dividends are probably going to change if the market starts to take off again and everything's going up again. There's going to be an adjustment phase with dividends changing, but a lot of these miners aren't going to want to upset the apple cart, too early. They're going to want to make sure that their share price is moving up nicely to be able to withstand any adjustment to a dividend.
I've been waiting for this stock for over 12 months.
Well, it's definitely not ready yet, is it? I mean, it's just too early, way too early. We've got a nice trend down there. Well, let's just. But
I like the
trend
pattern
line
that it's made. It looks like, if it shows us some strength, it could be a ripper.
Yeah, so we've got a nice line down there. I mean, a lot of people were looking at it when it was trying to make moves up here. We had people asking about it, but it was just too early. We were really concerned it could take out this low, which it has. And we often cheer, don't we? When we see these moves, we think, fantastic. We're seeing patterns unfold that we've been expecting. So that's a nice little one to look at. Now, let's compare these to the banks. So all of the stocks that we've just looked at, we're going to use two banks. Commonwealth Bank is one. You cannot scoff at 6.4%.
And it's
That's
probably
a really
fully
nice
franked
and
as
fully
well.
franked dividend. You frank that up, you've got a nice little return there. So that's really nice. But if you get some capital growth on top of that, and we're looking through to these highs, we could be seeing moves up, at least 120, 130. So that's somewhere between 10 and 20% in there. Plus you're getting a dividend in there that's good. Even if you don't get all of the dividends, it depends on what your time frame is for trading the share. But we've still got to see that next push up because it's just ugly, isn't it? The sideways move that we're seeing, you just can't sugarcoat it at all. It's just ugly. Now the funny thing was that we actually heard a broker say that CBAs actually should be valued 20% below, 20 to 30% below where it is today.
That means
it was
buy.
Goldman Sachs.
That means buy.
Yeah, so they were trying to talk it down. Now it hasn't fallen away, so
which means nobody believes them.
We see that all the time, don't we?
Yeah.
But I mean, it'd be funny. Look, if it went through this low here, not funny for anyone holding it, but 97.69, I'd probably be a little bit concerned about it.
Yeah.
So ANZ's the other one we want to compare to these other miners.
Nice, isn't it?
So let's go back and have a look. So if people were worried about the bank shares and still hang that carryover from the Royal Commission, I'd probably say not to worry at this point.
I wouldn't say worry about it at all.
ANZ, we're looking down here, 6%, not far behind Commonwealth Bank, but really nice little move across here, trying to push through this high here. We've got some, you've got to decide what you like better. I mean, CBA is close to its all-time high. Once it breaks through that, it's going to be blue sky. There's nothing holding it back. ANZ's still probably going to struggle as it goes up a little bit on its rise, but, we saw this falling over effect way back here in 2021.
Yeah.
But, this is a real stumbling block for ANZ at the moment.
But our banks are reporting next month, aren't they, their results? Is it next month?
Yes, we had a conversation about that today, didn't we?
Well, I'm just confirming that for everybody. Just speaking to the oracle of all things banking and BHP, which is you, but I believe that. So therefore, if we get some really good results out of the banks in their reporting next month, then we may start seeing these stocks take up. Because last week was the first week for a long time I've seen materials and financials all both moving up.
I know, that was
exciting. So I'm quite excited. I've been excited for that to keep happening. So I think it's really, really good. Anything else you want to talk about?
And so I guess you just add it up and see what sort of return is possible. So if ANZ does go up, we've got the first level here. You've got at least 10% anyway in there, but potentially could be up around $32, $33.
Okay, I love it anyway. Well, Janine, that is it for our topic for tonight. Now, for those watching on YouTube, you can watch the full 90-minute show by taking just a couple of minutes to get your free 7-day subscription to talkingwealth.com. Now, in doing so, you gain access to the full version of the Australian stock market show, including our past shows. Now, you will also get to watch my Australian weekly stock market report, where I share lots of hot stocks every single week.
That's exciting. Now, can I say, I love talking wealth. Can I say that?
You can say that.
Now, as I get to, a great opportunity, and you get to watch hundreds of interviews with trusted experts from around the globe, and I really get excited when I'm interviewing these amazing people, and I've got a couple more this Thursday that I'm doing, which I'm excited about. Now, it's like going on a health kick, really, for your brain. Yeah, that's how I think of it. Now, if that makes sense, now you can gain so many insights, and I feel excited to be part of this and contributing to helping, I guess, all of us have a happier and healthier and wealthier life. So if you've not visited talkingwealth.com, then I suggest that you head over and get your free 7-day trial at talkingwealth.com.
Well, Janine, I love it when you get excited about interviewing an expert, I tell you.
We argue sometimes, don't we?
And I'd love to talk more about that, but I can feel a What the segment coming on.
Oh, yay.
And last week I saw that some viewers gave you encouragement by making comments below the videos. Please, don't encourage her.
Oh, that's not very nice. We need 30, so come on, give us a hand. Count how many are there and just keep putting the comments in. Now, I love it when we get lots of comments. Now, don't listen to Dale. Now, I want everyone to tell me what you think of this. Now, I'm going to put on my serious face here. If I can do that, I don't know if that's possible. I find this, the title of the article from the ABC website read, US Albermarle makes $6.6 billion takeover offer for WA lithium miner Liontown Resources.
Hey, that's a big number, but I'm really confused about this one, Janine. This is actually, isn't this what we're not supposed to say, what the?
Yeah. Okay, now let me explain. We know a number of Chinese companies have tried and failed to take over some of our listed minerals companies. And a Chinese company recently tried to take over a lithium miner, but the Foreign Investment Review Board knocked it back. Now, it can declare that the deal's not in the national interest. This time, it's a US company that wants another of our lithium miners, and this is not just any lithium miner. Also, remember what we showed you last week.
How am I supposed to remember that, Janine? That was a whole week ago.
Well, then you need to go and have a look at last week's show. We showed a vitally important graph that you need to know about. Now, how about we get back to the topic of Liontown?
Okay, so you're talking about Liontown and the takeover.
Because the graph was really important, wasn't it? It was exciting. Can you remember it now?
No.
You can't still remember it?
No.
It was all about the critical minerals.
Oh, I can't remember that one.
That was a very sexy graph.
That was a sexy graph.
How can you forget it
now? Yes.
So it is an important company given the rights or licenses it holds now, which really is a license to print money into the future. So shouldn't the Australian government be making sure that we block the takeover of critical minerals mining by any overseas interest, particularly if the minerals or metals being mined are on the critical list?
Well, you got no argument for me, Jane. I think. I mean, we're selling off the farms, or allowing miners to dig up important food bowls. So why not sell off all the mineral rights as well? It's not as if we need to eat or even make any money for Australia. So we can have a better future. And it's not about that, is it? But my vote is firmly in the camp that we should be blocking these sorts of activities.
Now, how about we take a look at the Liontown chart to see what all of the talk is doing to its share price?
Holy moly.
That's not it.
What the hell's going on with this? Oh, it's not it. Oh, God, the geez,
Now,
holy
I just
moly.
wanted to say something because there is a difference in this situation where there is a difference in this situation where if there is some technology that's being brought to the party, there's a different consideration to be made. But where the mining requires different technology and we don't have it, but where we have it, we don't want to be selling it off. Now,
so what's the chart telling you?
Liontown Resources looks great.
It looks really good.
Fantastic, but you know, would you expect...
that was, wow.
Yeah, it's just a huge bar up. Would you expect it to pull back from here?
You'd probably think so, but it depends on where the takeover happens.
Well, there could be another party interested in it at the same time. I'd be waiting for that.
I hope we keep it in Australia. But anyway,
So
at least, Janine, we're on the same page on this one. That said, I'm still not sure what there is in this thing, but if the FI, or Foreign Investment Review Board, approves this, then I probably will say a big what the. Now, before we can move on, can I suggest that our viewers, that if you are like us and you are passionate about Liontown or any great resources stock staying in Australian hands, then I urge you to write to us in the comment section below this video, but also write to your local government member and tell them what you think. Otherwise, we'll have absolutely nothing left to sell. Now, it's your time to call into the show because we do want to talk to you. So pick up your phone right now and ring 92909988. That's 03 for Melbourne, 92909988. So pick up your phone now, or you can text us on the number on your screen. Now, while you call us, we will answer the next email question. Now, this next email is from Gerard, who says, "Hi, Janine and Dale. Thank you again for another Tuesday night show. I'd like to have your thoughts on Energy Resources of Australia, or ERA." He said, "I bought some units of that stock in May 2021 at 5 cents and then sold them in September 2021 at 11 cents. Then in February 2022, bought them again at 8 cents and sold them in April 2022 at 10 cents. Since it went down and is today selling at 3 cents, I would like to buy it again as it is at a low price right now. What are your thoughts on the stock? Please, it is the time to purchase some units of this or not. Please, kind regards, Gerard." Well,
now, I can't quite see where he's bought. I think it's down here somewhere.
no, he's wanting to buy it again because he's bought it, made, I think...
At 5 cents is up here somewhere.
No, he hasn't bought it yet. He said because it's gone low, he wants to buy it again. But
well,
he's bought it and traded it twice and made money out of it. But now he's asking us to ask him whether he should be buying it again. So that sort of tells me that
he's probably more of an expert at it now that he's traded it a few times than we are.
Well, I'm confused. If you've bought and sold it for those couple of times,
it just looks. I don't know what's going on with it. I'd want to know what's happening. And
it looks crap.
It looks terrible. And just because you've bought and sold it a few times doesn't mean that it's going to work in the future. Well, it tells me if he's asking us to tell him whether he should buy that now, his last 2 buys have been guesses. Yeah, possibly.
Much more guesses. So
look, I admire him for having a go. I think
so do I.
I think the stock looked great when it was going up here. I just think that now I just let it go. I wouldn't be worried about it. You know, the interesting thing is it made this little bottom here, and it's pulled back nicely from as far as all little moves off the bottom.
Whatever he's done in the last 2 times, do it again.
Yeah. Is that what you're saying?
You know, but again, it does. What he's saying doesn't suggest to me that he's got solid rules.
But if it went through here, it could keep going up. There's a potential.
Yeah.
But it's still risky though, isn't it?
All right, Janine, we've got a caller on the line.
Oh, we do. We've got a caller and it's Michelle. Hello, Michelle. How are you this evening and welcome to the show?
Thank you. Sorry, is that Janine?
Yes, it is. How are you, Michelle?
Yes, hi, Janine. I'm very well, thank you. It's lovely talking to you and Dale again.
It's the Janine.
Question about Telstra, guys.
Yes.
Telstra, it's been performing very disappointingly, I feel, and I'm just sort of wondering about whether to look at something else that has an uptrend rather than going sideways. I've been in Telstra now for almost 2 years, and it's just been going side to side to side. If it goes any further sideways, it's walking like a crab.
Yeah.
I just,
Now, why did you buy it? Can you tell us that?
I beg your pardon, Janine.
Can you tell us why you bought it?
I think because being a customer of Telstra, I bought it for the wrong reasons, yes, Dale. I bought it for the wrong reasons, being a customer of the company for many years. But also I felt there was going to be, with the company being under...
they've done a restructure. Yeah, they've done a restructure.
Yeah.
So
and I thought maybe perhaps it's going to give the opportunity to grow, but I'm really disappointed.
Yeah.
I'm
Look,
with you.
we've been bullish on it, and we were saying we thought it looked great too, but we're just waiting to see. At the moment, it's at a level that we think that it could find support. So we're just watching to see if it consolidates around that current level and pushes back up, because this could be a short-term cycle low that we're seeing coming in at the moment. And it may just push back up above that $4 level, but it took so long to get above $4, and so that's the real challenge for Telstra, is to get back above the $4 level.
Yeah, I think once it gets above that sort of level, it'll be going.
Once it gets back above,
Dave.
yeah, Dale's just saying, once it gets back above $4, it's more likely to push back up again.
Yeah, so in other words, what Dale would say is sit on your hands, Michelle.
Well, no, it's really up to you see, Michelle. So it's about your risk that you're managing. And if you're not comfortable with the share and you've got rules on it and it's triggered those rules, then you've got a decision to make, and you can choose to sell it.
It hasn't broken my rules. No. I'm just just getting a little bit tired of it. So I've got a 15% loss on my initial outlay. So, if it goes down too far, yes, I will sell. But I was just getting a little bit sort of thinking, what the hell's going to happen with this lot? But I will sort of keep on with it with a little bit longer. No way am I losing 15%. I reckon I'm about 5 or 6% down at the moment.
Well, look, I'm just interested to see what happens coming into the retail before the festive season, to see what happens. So once that kicks in, we've just seen the stock, it's gone ex-div, I believe, and so we could see it turn around now after going ex-dividend and coming back up. We can also judge a stock too by how far it actually falls when it goes ex-dividend, to see if it's more likely to find support and start moving back up again. So below $4, we know that the institutions are going to be wanting to pick it up. So that could drive it up a little bit back to $4. But like I said, it's all about that $4 level. If it can get above that in a few weeks, then we could see Telstra start moving back up again.
Cool.
As always, guys.
Thanks, Michelle.
Thanks, Michelle, for calling in.
Thanks so much.
Did you want to look at the chart at all?
Look, I'm happy. Did you want to have a quick look?
Well, I'm just asking.
You've got a line on the chart?
Well, I do. I just put a trend line up on it. This is just the monthly chart. I put that up.
So you talked about Telstra previously as being long-term?
Yeah, and the reason why I say that is when you look at this, that's the lowest point in Telstra's history, So, and this is generally, you'll see this when a stock comes out of a big long-term bearish nature. So to me, long term, this is bullish. I'm talking 10 years, 15 years. It'll be way above this level in 10 or 15 years' time. But it's just struggling to get going with all this COVID stuff and all of that sort of area that we've been in the last couple of years. The lack of confidence and lack of consumer confidence that we've still got at the moment.
Yes.
I think once the market starts to really gather a bit of momentum, which you were saying earlier, it's ready to explode.
Yeah.
Or we both think it's ready to explode, then I think Telstra will go with it. So, but you are right, Michelle needs to make sure she's got a stop loss on it and to manage it that correctly. But how's that?
That's fantastic. Thank you for that. And next we have an email from Carol. Hi Dale and Janine. I have been observing Kogan and note that you have discussed Kogan in the past, and I've noticed in their announcements that there is daily notifications of buying back. Can you please advise what that actually means? Is it that Kogan is buying back their own shares, or is it for a totally different reason? I've also noticed that there is a lot more advertising of Kogan on TV. So is there lots of potential upside to come? Love to hear your feedback. Always love to gain more knowledge and tips, and hopefully other listeners, students may get something out of the above. Carol, thank you so much, Carol. All right.
Okay.
So looking at Kogan, look, if it holds over the next, even if it takes out that low, I wouldn't be too concerned about it, this August low, as long as it doesn't go too much further than, what's that level there?
Oh, I don't have my glasses on again. I just took them off.
Quick, $4.80.
$4.80, yep.
So if it goes below there and just dips below there and turns around and goes back up, I'd be pretty happy with that. But I guess I wouldn't get sucked into an early rally.
Well, you want people to buy Kogan rather than buy stuff from Amazon, don't you?
Well, I'd rather people buy from online retailers than Amazon. I mean, it's just too... The problem is it's too easy for people to just buy on Amazon.
Well, it is too easy for people to buy on Amazon.
They're selling us out by doing that.
And eBay. So we should be buying with Kogan, shouldn't we?
Yeah, we should. One of the online... Even Booktopia is another one. They've got online books. Just anything that's online that's Aussie, we've got to put more weight behind it and support our own. So I would just say, looking at it, if it gets above, let's just expand this chart out so we can see what's going on. I'd really like to see it get above this high of $5.
Now, Carol was talking about a buyback. So do you want to explain the buyback?
I haven't looked it up, but specifically buybacks. When they're buying back the shares online, it's actually great for the share price if they're doing the online buyback, because it helps support the share price to go higher. And sometimes companies will do that if there's been some announcement that they're trying to just keep a floor underneath the share price, then they'll do it. But look, I just think the stock market is full of contrived. We know that because we've watched so many movies, but it's too easy for big sharks out there to keep company share prices low.
Correct. Correct. But Carol's asked the question, so thank you for answering.
Did you want to have anything else to say about that one?
No, I think you've covered it perfectly for Carol.
So do you think it's going to go up?
I like it.
You like it?
I do like it.
Well, that's all we have on Kogan. We hope you enjoyed our show on YouTube. Please show your support for us by commenting below this video, because we'd love to hear your favourite part of the show. Also, give us a big thumbs up, and it really helps new people discover these videos. Make sure you subscribe to our channel so that you know when we go live. For those watching via Talking Wealth, stay tuned for the bonus content we promised.
In next week's show, we get into the debate about US stocks versus ASX stocks. We give you our top 5 stocks. We'll also take your phone calls, answer your questions, and so much more. So make sure you put next Tuesday night show on your calendar. Remember, if you have a stock that you want us to look at, or you have a burning question, then send an email right now to info@wealthwithin.com.au, and then watch next Tuesday night show as we give you the answer. Also, give us a big thumbs up by liking the show, and make sure you subscribe to the channel. Also, make sure you comment below this video about what was your favourite stock from tonight's show. Now it's time to say goodbye to our viewers on YouTube. We do hope you enjoyed what we presented tonight. For those watching at talkingwealth.com, stay tuned for us to give you that bonus content. As always, thank you for joining us. But for now, goodbye, good luck, and good trading.